right. Good afternoon, everyone. It's my pleasure to be here with you today. Super stoked to be here at Propelify and welcoming you to our investor panel. I have two seasoned investors here with me and excited to kick off the conversation. Before we dive in, thought it'd be helpful to start with some quick intros. So I'll key it off, then turn it over to Annie here, and then Steven just to give a quick 60 seconds on who we are and what we do. So my name is still Ben Novak. I'm a venture capital partner at Morgan Lewis, where I work in our emerging business and technology practice. So I represent tech companies and investors in tech companies, ranging from angels such as myself to venture capital funds, private equity funds, sovereign wealth funds, some of the bigger banks I work with, JP Morgan, Jefferies, so forth. Separate and apart from my full-time law practice at Morgan, I'm also personally an active angel investor. So I look at probably close to 1,000 deals a year and target investment in 5. I invest in seed stage tech companies based on the East Coast of the US, mostly here in the Mid-Atlantic region, affiliated with a couple different angel groups, and do most of my deals lately through a group called Delaware Crossing Investor Group. So I'll turn it over to you, Annie. Could quickly introduce yourself, who you are, what you do.
Hi, everyone. My name's Annie Evans. I'm the founder of Dream Ventures. We are, half side of our business is advisory, and we help founders raise capital and secure game-changing partnerships. And the other side of our business is Dream Ventures Capital, where we back founders building a better future. We have about 15 companies in our portfolio right now. It's so awesome to be here. I was telling these guys the last time I was at this festival was 5 years ago, and I was waitressing and serving hors d'oeuvres or canapes, whatever you call them, in the VIP tent to the guests, and I was coming off of a failed startup of my own that was VC-backed, and I was broke. So I would have not imagined that I would be here 5 years as an investor, and I'm very excited to share a couple things I've learned along the way with you all.
Great, happy to have you here. Steven?
Hi, I'm Steven Rosenblatt, co-founder, general partner of Oceans. We started Oceans a little over 2 years ago. We're an early stage seed fund. We back startups from at the very infancy, tech at the core. Before that, I was president of Foursquare and led a very interesting transformation from what most of you know as a consumer app to what is today a very thriving enterprise data company. And before that, built a very early mobile company called Quattro Wireless that was we sold to Apple in 2010.
Great, thank you for joining us. So I know we have a diverse group of people here, a mix of entrepreneurs, investors, service providers, others, but I have a feeling there's a couple of people in this audience that are raising capital and interested in learning more about how to better raise capital. So first, for those of you on stage here, can we start with just talking a little bit about kind of the sweet spot of the investments that you do, maybe starting with Steven. So at Oceans, what preferences, what limitations, geography, industry?
Yeah, I mean, we're US focused, we're generalists. We tend to do digital health, future work, climate, education, fintech. So we're broad. We bet on people. We bet on talent. We know and look for something special. That's what I mean. Building a company is not easy, and building a tech company is that much harder. And for us, we just know that it's so much about the talent and people. So we look for people that are incredibly passionate. There's a real life reason why you're building what you're building, or you've got some incredible insight, domain expertise, something that you've learned from your history as to why you're going to go build something that others can't build. And so that's really what we look for: exceptional talent, building in large markets, and hopefully looking to build something that will be a 5 to 10 year journey to change the world in some way.
Could you speak quickly as to stage? So when
Yes.
is a good time? What's a rough check size for your fund?
We invest. So today we typically invest somewhere in the 250 to 500K range. We'll be investing come January in the 1 to 1.5 million range. Again, early. Typically we don't look at valuation. We look at kind of stage and infancy. So best talent, early stage, starting it out. You can bucket into pre-seed and seed. Valuations have gotten crazy. Usually we're investing sub 25 million. Valuation is usually where our sweet spot.
One more question for you, and I'll turn it over to Annie here. So when is too early or too late to talk to you?
It's never, it's too early if you don't have a real good perspective of why you are the person to build the thing you're about to build. Again, we don't write like friends and family checks. We're kind of first institutional money. So there's something of substance ready to go. When I say substance, we back teams, but those teams, again, usually have really critical insight about what they're building, have experience building it ready to go, or they've gotten, built some product that they can show. But it's never too early. It's really based on the talent. It's too late if you're already raised a lot of money, further along, and you're looking to scale, further into kind of the growth phase. We like to be in early.
Great. All right. Same question to you, Annie. Can you talk a little bit about your preferences, limitations, sweet spot for companies?
Absolutely. So for us, ever since I had a child, I became more interested in companies that were sort of building a better future for us and for him. And so we like to invest in companies that are essentially making the world better, whether it's doing something in a more sustainable way or giving people access to something that they don't usually have access to, women's health companies. I love companies. There's been a big emergence in companies that are supporting parents at the workplace or making their lives easier, or companies that are super interesting to me as well.
Excellent. So given the unique time of this conference, given this unique time in human history, my hope is that we could kind of keep the conversation geared to raising capital with actionable takeaways for the entrepreneurs in the audience of do this, don't do this, this is how you get my attention. But also, how is that different now? I know, for example, at Delaware Crossing Investor Group, a number of things have changed. Our investment thesis as an angel investment group pre-COVID was one thing. Then COVID hit, and we had to ask some hard questions about, are we going to change our investment thesis? Are we going to deploy more capital? Are we going to hold off on capital? Are we going to invest in different sectors? How are we going to change our thesis? And that continues to evolve. I think a couple of months ago when vaccines were rolling out and rates were dropping off, we were all very optimistic that we were going from COVID to post-COVID, but we're once again in this unique place where, with the Delta variant and cases still skyrocketing up and down, we're not quite out of this yet. So I guess my next few questions kind of relate to, and understanding some of these are newer investment groups. Can you talk a little bit about kind of how things have changed in your process throughout COVID? So maybe I'll start with you, Steven. From COVID to wherever we are in COVID now to the future, can you share some thoughts on how things have changed?
Yeah, for us, I don't think really a whole lot has changed because we're making bets that are, 10-year bets. So we're trying to bet.
All right, so 10 years for COVID, that's our clock. We're going to be out of this.
If we're still in it, we got real problems. But no, we're looking at themes and things that we think over the next 10 years are going to change the world, not tomorrow. I think the thing, if you're raising money, you got to look yourself in the mirror and say, what do I want to be? Do I want to own most of my... I think they said a little bit in the last panel. Do I want to own all my company or do I want to own a small portion of my company, but a much bigger pie, right? I think when you raise venture money, you got to go in knowing that more than likely, if you're successful, you're not going to own 100% of your company at exit. You're going to own 10% of your company. But it's 10% of a several $100 million or billion-dollar pie versus someone who wants to own all their company. And, that pie might take them a lot longer to grow. There's no right or wrong answer. You have to really think about what do you want and what kind of business are you building. Most businesses I get pitched on, they're not venture-backed. They should never raise venture capital. I think you have to figure out, am I raising something because I need to scale fast, I need to go quickly, I need to compete for the best engineering talent. That's a venture-backable business. Or should I raise, from friends and family, or should I raise from private money, or should I take a loan out from the bank? None of those are wrong answers. You just have to figure out what you want to do. For us, we're looking for the founder that wants to build something incredibly fast, hire the best talent in the world, and be, ideally be several $100 million, $1 billion businesses at minimum. because we make a lot of bets and we know only a few of them will pan out that way. And so I think a lot of founders just don't have that, like, what do I want to be? What is the business I'm building? And what's the right capital source for the business I'm building? And I think that's where a lot of this mismatch. It's like opening a restaurant. You're like, oh, my restaurant failed. It failed because you put it in complete wrong location. Your service sucks and your food's awful.
They didn't just run out of money.
Right?
That's not why they failed.
That's why your business.
Money.
That's why your restaurant. So you got to know what you're doing. And you got to look yourself in the mirror and really have that kind of hard conversation with yourself.
So in case you weren't here for the last session, I think we are all underscoring that venture capital is not for everyone, not for every company. Same with angel capital. It's a different way to view your company. It's not the right thing or wrong thing to do. It depends on your model and what you're trying to accomplish with your company, personally, professionally. And there's different models. I mean, if you're not looking to sell your company, you probably should not be raising capital. The second that you take an outside check from an institutional investor is the first day that you're up for sale, or at least in a process to drive towards liquidity, because that's what your investors are expecting. So, Annie, maybe I'll turn it over to you, the same question, and maybe you could also kind of talk a little bit about some of the alternatives to capital and alternative pools of capital.
Absolutely. So, we work with hundreds of founders, and as Stephen said, many of them are not, venture capital type businesses. So I'm always trying to educate and share resources on other alternate ways of capital. A few of my favorites are I Fund Women. It's an amazing platform to fund your business. I did a campaign on there recently and raised $50K in a month to be able to grow my team, and it was an awesome experience. Another one that I love is Republic, crowd equity platform where you don't have to give away, rewards like some of the other Kickstarters and things like that. WeFunder, and let's see. I think those are sort of my top three favorites. And then lastly, I started doing SPVs the last year, and I know they're not a new thing, but they've had a real surge, with companies like AngelList and Assure. There's a new one, Party Round, that Andreessen Horowitz just backed that I'm super excited about. Definitely check it out for their beta. It's going to be Venmo for SPVs. Make it super easy for people to back your syndicate.
Great. All right. So let's talk a little bit about how people can get your attention. So maybe, Annie, I'll start with you. Can you talk a little bit about how people get your attention, maybe the importance of warm introductions? If people can't get a warm introduction, how do they get your attention?
Such a great question. I have literally never once in my life responded to anybody that's pitched me on LinkedIn. Anybody that sends me an email pitching
Amen.
their company on LinkedIn, I've never, ever responded. So love a warm intro. I would say if you can't find that, a thoughtful email that says, hey, I listened to this podcast that you did. It really inspired me, and I think you'd be, a really strategic investor on my cap table for XYZ reason, or something personal. But definitely a warm intro is great. And then I think just how to get my attention is being able to clearly articulate what you're building and how you're the person to be the one to build it and be successful, and be able to do that with conviction, I think, is what always gets me to whip out the checkbook.
Stephen, anything to add there?
Annie, you're tough. Very tough. No, Annie covered it. She's good.
Okay, sounds good. So I'll second LinkedIn. I mean, one of the challenges with LinkedIn, and this is a complaint of most of the investors that I work with, is that they're excited to deploy capital. They want to deploy capital. There's lots of people that they want to talk about, but there's certain people that they don't want to talk to. There's certain sectors they don't invest in, or maybe they're a U.S.-based investor, and there could be lots of great companies in Israel or Spain or France, but if your fund doesn't invest in France for whatever good or bad reasons, it's not worth the entrepreneur's time or the investor's time spending their precious limited resource of time engaging in those conversations. So I second that. I do not respond to 99% of the LinkedIn messages, so I apologize if any of you have messaged me on LinkedIn and I have not replied. It's because I just don't check those messages. here's a quick one, and you touched on it, Andy, so maybe I'll ask you, Stephen. Cold emails. So 99 I don't respond to. There's that 1% that just gets me, and I'm like, all right, this person seems interesting, good hook. I'm going to engage and see where this goes. Cold email. I mean, how many seconds do you read that cold email, Stephen? And what could catch your attention? Or is there nothing in the cold email that will get your attention?
It's tough. I mean, we got so many inbounds a day, a week. Again, I think as Annie said, you gotta, the more relevant, do your homework. And I think if you have something incredibly compelling and it doesn't look like it's just a vanilla email because, that you're sending to 100 people, I think you have a better shot. I mean, something that is going to be breakthrough, it really has to be breakthrough.
Shorter, better? So I get a lot of emails that are like 99 paragraphs, at which point I read like one sentence.
Shorter,
if they
better.
send me a
Yes.
paragraph, I may read it, but so shorter is better?
Shorter, better. Get to the point.
One quick tip here is in the fundraising process is a process, and your objective should be getting to the next step in the process. You do not need in an elevator pitch or a first conversation with an investor to get a check. Your goal should not be to get a check the first time you meet with an investor. It should be to get that next meeting, to get a response to your email, to get a call, to get a video chat, to get a meeting in person. It's a process, and a lot of people kind of don't focus on that and kind of race to that finish line, at which point you're kind of losing the opportunity to get that follow-up meeting. So maybe now, looking at the clock, I think we have a couple more minutes here. So could we talk a little bit about where you get your best companies? So we talked, you're flooded with LinkedIn messages, you're flooded with cold emails. Where have you been finding the companies that you ultimately invest in? And maybe that's a backdoor to figure out how to get in the fast lane.
I mean, the one thing I would say, since you shit on LinkedIn for a second, is that, I think LinkedIn, I mean, you can find connectivity in through, a LinkedIn. That works, getting that warm introduction. But, listen, we've invested in our first fund, 36 founders, and to be honest, these are people that we know incredibly well. So one of our companies, was started by the 15th engineer at Facebook. My partner opened Facebook New York in 2007. He knows that person well, right? Like, there's a lot of warm connectivity already in. And again, that's why to break through, so the hurdle's so high, because we have, typically the 36 companies and 70 founders we've invested in now, and that we continue to see and really tend to focus on are people that, come highly, highly recommended through people we're already close to. So it's possible, it's definitely possible to break through. It's usually typically because, that breakthrough note is incredible, or you found a way to get a warm intro in. But it's hard. Listen, it's not easy, and I've raised at Foursquare. We raised $400 million plus over the 10 years. 12 years, and before that raised 20-something million at Quattro. And I think it's figuring out what you're doing, why you're doing it, and find someone, because building a company, it's a great way to see if you're gonna have the stomach to go the distance, right? You're gonna building a company, you're gonna pivot multiple times. People are going to say no 1,000 times, as you heard before. You're going to have near-death experiences. But if you can figure out a way to get to that warm intro and hustle your way there, then it tells you something about who you are. And I think that's one of the things you do look for.
So I entirely agree that the warm intro flips those odds, right? So say there's the 1% of the LinkedIn messages that you might reply to. The warm intro, 99% I reply to. And if it's coming from a co-investor that knows my thesis, that I know and trust, 100% of the time, I will set up an in-person meeting. I will meet with that person because that's a good pre-qualified lead based on someone who knows the type of companies I invest in. But even if it's not the kind of co-investor relationship, if it's someone I know that's taking time out of their day to say, hey, Ben, I think this is a good fit for you, 99 to 100% of the time I reply to those. So maybe let's flip it. How do you get that warm intro? Say you're new to the startup space. This is your first startup. Like, how do you grow your network? How do you find the people to make those introductions?
Annie, you answer that question.
100% build a killer advisor board. So make sure that you surround yourself with advisors that are, I always tell founders, like, have a few people that have raised money before, that have a deep network in, the venture capital world or the angel world or whatever makes sense. Because when it's time to raise, these people can make warm intros and they'll be incentivized to help you to do so. So I always say just advisor board and surround yourself with people that are connected.
So
What?
the age-old adage, if you want capital, ask for advice. If you want advice, ask for capital. But yeah, I mean, do you want to add on? So how do you find those advisors? I mean, so there's events like we're preaching to the choir here because you are people who are keyed into this ecosystem attending venture conferences. So I feel like we have some people that are already a leg up on the competition. But any thoughts on how to grow that network? I mean, is it events like Propelify? Is it groups like Tech United?
Yeah, I mean, there's a million ways. I mean, you can follow people on social. You can see what people are saying. You can go to events, listen. It's hard, right? I think again, that's where if you can't find someone who can intro you, then you got to be really thoughtful. So know your audience. If there's this bullseye of what you're doing and what you're building, and that other person is waiting for you to call them. Like, you show up because there's such a great marriage, you're going to get, more than likely, you raise that probability of, so it's like anything, it's old-fashioned hustle and being smart.
Yeah, I like that. Be strategic, right? So it's the hustle, but also the strategy, right? Your most limited resource is not your money, it is your time. So be careful how you're allocating those minutes, those hours, those days. All right, we're getting down to our last couple of minutes here. Every panel that I moderate, I always want to give the speakers an opportunity to give a last, final, parting shot. Key takeaways. What do you want to leave? Annie, I'll start with you. What do you want to leave our audience with? How can they succeed in raising capital at this time in history?
Just, continue to hustle. One tidbit that I'll share with you is I was talking to a founder yesterday, and it's a sports company, and she got Naomi Osaka's coach to invest. And I said, how the hell did you get Naomi Osaka's coach when you're such a new startup? And she said, I literally just, DM'd the coach and just asked for a meeting. And it's just that kind of hustle. You got to just don't be afraid to put yourself out there and just go for it.
So as a hockey fan, the Wayne Gretzky quote, you miss 100% of the shots you don't take. So, Steve?
Yeah, I mean, what's kind of crazy and doesn't make any sense right now in this world is the amount of capital that is out there is just enormous. There's a lot of money that is looking for a home, and people are looking for returns on their money, and they're not getting it in cash, and they're not getting it by having it sit in the bank. So there's a lot of money to be, to invest in great ideas and great people for all different things. I got pitched the other day. The trainer's like, my wife's, doing some gym class and trainer, and he wants to open up in Hoboken or Jersey City now because he's built this incredible community, and now he wants to build a space. And he was like asking me for business advice. It's awesome. There's always someone out there, and I'd say you can't take failure personally. Like, you're going to get rejected a lot of times. If that offends you or you can't handle that, you probably shouldn't start a company. Failure, there's no such thing as failure. I think you're going to fail, but you're going to learn from those failures. And, it takes time and persistence. So I'd say keep trying. Make sure you're listening to what people are saying. Don't just keep beating your head against the wall. You're like, I know I got to build. Listen to what people are saying, giving you feedback. You don't have to necessarily do what they tell you to do, because I wouldn't. But understand, is the idea and what you're trying to build, does it make sense? Is there an audience? Are there people that I can sell my product to who want it, right? Or am I an audience of one and I'm the only one who really thinks this is good? Because people get caught up in their own Kool-Aid, or they're just so fixated on something, but no one else thinks what they're doing, what they want to build is. So talk to people, talk to your friends, test it. The best thing you can do is go out, whatever you're trying to build, the product you're trying to do, trying to sell, go talk to 50, 100 people that you think when you build this, they would buy it, and see what they say. And if they're like, this is amazing, I would, but not, this is amazing, go do it. This is amazing, I would pay for it. This is amazing, I would use it and pay for it. Then you're probably onto something. If you talk to 50 or 100 people and they say, I'm not really sure I would do that, you might want to, do the pivot and tweak what you're doing. So I think that's, that's the way.
I like it. I'm afraid we're out of time, but that's a great, final parting shot. I often think about this in my own life. If you're not finding those small failures, you're probably not trying hard enough. You should be pushing those limits. It's okay to fail. It's part of the process. Pivoting there's very few successful companies out there today that have not pivoted their model. So the kind of joke is, you're too early for me. You're a pre-pivot company. You're still doing what you started out doing. But, all right, we are out of time. Just want to thank you all for joining us and ask you to give a round of applause for our speakers today. Thank you.